Ladies and gentlemen, welcome to the new Microfinance session, moderated by Neoklis Stamkos, Project Manager of KEPA, with the participation of Evelyne Oprel, International Relations Manager of Qredits, Georgi Breskovski, Executive Director of Mikrofond, Artur Munteanu, Advisor of Gestionare Capital, Pentru, Dezvoltare.
So, good evening everyone. Welcome to the first session after lunch. It's always difficult, but nevertheless, we have work to do and things to say. So, if I could see my presentation in behind. So, for those that you may not be aware, KEPA, who is organizing this event, is an organization that is working for more than 30 years now in the region of Southern Macedonia. We have been, our job was, we've been set up by Ministry, by Federation of Exporters and Federation of Industries, and our job is to implement and use structural funds to our companies, to our country, to our region. More than 40,000 different SMEs have received support by us, and the total amount of grants is something around 4 billion euros. The majority of them came in the last 2 years because of COVID. So after 2015, we have started incubating a microcredit facility, MicroStars. We saw the gap of the market, we saw that the huge demand also, and we saw that we must do something to support the SMEs of our region at first. And we saw that microfinance is a tool to do so. Everywhere around Europe was many examples to show, and we tried to implement the Greek case scenario. So we did microcredits in a collaboration with a bank, because we cannot do it on our own. We provide business development services to all our beneficiaries and our clients. And during all this process, we have managed to succeed to have our Greek legal framework voted last year from the majority of the members of the partner, one of the few legal framework, laws generally, that is voted from both major political parties, which shows how important microfinance is for our country and how it can be, how it must be the willingness of doing something. That slide here shows exactly what's the situation here in our country with the financial sector and how they can finance SMEs. You may see the data are really relevant. They are being published in the media 1 month ago. So you may see that at least half of companies in Greece do not go to the bank at all. They don't try at all to have access, while the other half, 30%, is pending on receiving a client and a loan, and 21% is rejected. So only 1/4 of the companies that are willing to go to get a loan from a bank receive something, which is a huge amount. It's one of the smallest numbers around Europe. Another issue is the interest rate, which is a bigger fear. Average interest rate in Europe for SMEs is around 2.8%. In Greece is 5.8%. So many companies are afraid of entering a bank because they are thinking that they will pay a high amount and they cannot manage. Also, these are data that are used for our government in order to see how they will disseminate the money from structural funds and from the recovery fund. We have 800,000 SMEs, from them only 20,000 can have access to banks. And for those 20,000 SMEs, 12.8 billion euros are dedicated from the recovery fund and nothing for all the others. In my eyes, I see 780,000 different opportunities for microfinance, for sure, because these are the clients that we can go for it. And this is a message not only for the Greek policy system, but also for foreign investments, foreign MFIs, that look, here is a gap that it can be covered. So come invest in our country on microfinance. Now, our topic is on new microfinance. So I have to share a few thoughts of What else is happening out there? We don't have it in Greece, but around Europe there is many examples and facilities. One of the greatest fears that's coming on the sector is artificial intelligence. This is a slide from a company in the US. They provide loans only with artificial intelligence. No branches, no staff, no nothing. Just a loan application. 1 billion euros in 2020 in COVID and 1.5 billion euros disseminated under this path from only one company. They give you a loan in 2 days, but the problem is that artificial intelligence is not so intelligent. You must have an e-shop and they evaluate you under the activity that you have and the people are moving around your e-shop. On the other hand, it gives loans to companies that nobody else will give them. It's a very good case that technology can minimize the gap, give fair finance to everybody, but we have to see how fair and to whom. What about blockchain? We decided to put a blur picture here. There are many things happening on blockchain. Many projects were developed, a lot of money is invested in infrastructure, but not so many are implemented now, mainstream. The majority of them are focused on lending or decentralized lending and using cryptocurrencies on that. Ether, blockchain, Bitcoin, and whatever is around. Nothing more so mainstream, nothing more new and useful to all of us. That many, not all of you actually, you are in the sector in Europe for more than years than we are. So we are thinking of doing something here in KEPA. We want to use blockchain and this tool, this instrument, in our daily activities. In the next couple of, next year, when we will try also to claim a license to be an MFI, we want to develop an instrument that we will use blockchain from the repayment process starts and afterward in order to do 2 things. First of all, provide a certificate of clearance to those that we lend, that they are viable and they repay the loans in order to be able to use it to a bank and claim a bigger amount of money, since they don't have any credit records, you don't have any history, and the banks are not interested. But with this, we hope that they will be interested. And secondary, we want to use blockchain in order to tokenize repayments, in order to be able to collect upfront money from investors that want to gain some profit for this job. We have contacted with Bank of Greece, we have contacted with many authorities to see if it's legal. They told us so far it is. And I hope in the next Alternative Finance Forum, when we meet again, I don't know, in 2 years' time from now probably, I might have more news of how on earth this works, how it is sustainable, how it can give results for us and results for our clients. So may I say a few words about the people I have with me. First of all, Evelyne, I know her 6 years now, something like that.
Yeah, we've been Qredits for 9 years.
Yeah. Even more. It's Qredits, she represents Qredits, one of the most digital MFIs that we have around Europe. It was quite an inspiration when I paid a visit to you on what do you do and how we should implement it in Greece. And it's a good example. We must listen to her story. Georgi Breskovski from Bulgaria also was one of our mentors in our early stages under EasyTA assistance, that he gave us his information, a lot of information of how to do this kind of job. And of course, Artur Munteanu, he has an idea for many, many years now, and now he's putting it on track on how we develop a new instrument for microfinance, micro-equity. So I leave the floor, ladies first. Evelyne.
Thank you. Can you put on my presentation? I'm with Qredits Microfinance in the Netherlands. I've been with Qredits for 9 years. Yeah, the directors of Qredits used to be in banking and saw that nothing happened for the small entrepreneurs. Qredits does, like as you see, Qredits. We have loan products. We do coaching and training because we believe in the whole full service package. Let's see, how does it work? Oh, that was pushing the wrong one, sorry. So we are a nonprofit foundation. We started by borrowing from the government and the banks. We have about 120 employees right now. And our mentoring services are, we have about 700 volunteer mentors. Then we borrow from banks and we use the EIF guarantees, which you can't do without as a microfinance institution. So we do micro credits up to 50,000 and then SME loans to up to 250,000. And we have several other products. And now, finally, we have more name recognition in the Netherlands. So different funds are approaching us to handle their funds for them, since we have the whole infrastructure. We also operate in the Netherlands, Caribbean, on these 4 islands. We've done about 26,000 loans so far for 580 million. Qredits was started with the idea it has to be sustainable within a few years, and it has to be as professional as a bank. So we invested a lot in our IT structure. Everything is online, application, intake screening, risk assessment, the contracting, monitoring. And this is hard to read the slide, but there's data from all different databases that gets imported automatically. We're working right now on the monitoring score. We have a risk score, but it's only indicative. We don't decide on that. We just decide what type of intake, what kind of screening does the customer get based on the score. And then we're working on a monitoring score as automated data comes in. You know, if there is a risk failure or bankruptcy or any big changes, then we are going to develop the monitoring score on that. Our focus has always been on good business plan. So we started with templates, and we see the banks using our templates for business plan and financial plan. Banks refer to us a lot now as well, because we service, a whole group that they don't. We have e-learnings on how to write a business plan and how to do marketing, and we have a lot of coaching I've mentioned. And then we have a lot of trainings, and we also started training schools, and we have also a school program that's used in vocational colleges. So we believe in the whole package. Then Qredits International was founded a few years ago to help smaller MFIs scale up or change their direction. But we offer these products. We are working with the Spanish MFI and actually also with FV in Greece to get them on the right infrastructure. And we have a partnership right now with Singlify. It's a Salesforce provider. So we bring the know-how on what they need to build, and they're building it into Salesforce, because up till now, for 12 years, we've built our own system, but we're slowly, once Singlify has grown big enough, then we'll switch to that as well. But, you'll ask more about that later. So that's in brief. That's brief what we have. Here you go.
So, Georgi, your story.
Hello, my name is Georgi Breskovski. I've been executive director at Mikrofond since 2004, and I've been working with the company ever since the establishment. So, brief history. We've always tried to be first in everything we do. We were the first to start a service company, service model microfinance company in Bulgaria in 1999. Because at that time banks were not lending, it was not clear if we can lend directly to clients, so we chose a hybrid model where we help the bank find the clients, we analyze them, we support them with the procedure, and we guarantee also the portfolio. That model worked until 2002, when most of the banks in Bulgaria, with the support of external institutions like EBRD, decided that they will also start to lend to micro companies. And didn't have any more interest to work with us. So then we decided to start lending directly and established and basically transformed successfully from an NGO into an MFI in 2002. We were also the first MFI to start getting funding from international social lenders. We were also one of the first institutions, actually we were the first to sign the senior loan with EAF under progress. And we're also the first to be able to structure such a product that we're able to offer the cheapest interest rate for startup loans on the market in Bulgaria. I'm saying all that because we've always tried to be ahead of the competition and the market, and we have always been open to new ideas and new approaches on how to operate. So, having said that, at some point we decided that we should be the first to become digital business lender, the first digital business lender, micro business lender in Bulgaria. But that could not happen, as we'll discuss later. First, some more ideas about our clients. We've always tried to work with underserved clients. During the years, we have had different focuses. We've worked with low-income families in the past. We've worked with Roma in the very segregated Roma communities around the country. We have worked with micro-agricultural producers in rural, distant areas where traditional banking didn't work. But lately, in the last years, we have focused mainly on startups and social enterprises. So, what made us think about digital lending, becoming a digital lender? First, there were a few changes in the market. The most significant one was that, unfortunately, in Bulgaria, we have extremely big number of online consumer lenders who are lending money at very high rates, but very quickly and very easy for the end client. So there was already an example that clients would take loans completely online without going to an office. And also we saw that many micro companies and many micro entrepreneurs opted to take a very expensive loan from a consumer lender just because it was very quick. That in the long term turned out to be very bad for the micro entrepreneurs, but that's the reality. Also, the financial crisis, as you know, prompted some actions from international institutions, and liquidity increased in the last years after the financial crisis. And the main result of that was that basically the market interest rate for micro companies decreased from 15 to 5%, which is extremely low for the business model of traditional microfinance institution, where you have very high operational costs, especially salaries for loan officers who go out and work with clients on a daily basis. So that was before COVID, and mainly because of this of the changes in the market, we realized that our long-term business model is not going to work. We have to decrease our cost, and the way we thought that would work was through digitalization and streamlining and automating processes. And that we tried, as I explained later, didn't work till COVID came. So we also, what exactly we did to try to become digital. In 2015, we bought online business loan software, which automated all the the onboarding and the business, the loan signature, and except for the disbursement. We also digitalized. At that time, we thought that digitalization is just making all your documents digital, which of course turned out not to be the case also. But we've always tried to avoid bureaucracy, so it was very easy for us to make all our processes and fully digital in our loan management software. We also, in that process, we realized that it's also important to figure out a way how to get rid of our expensive hardware infrastructure. So we were discussing and testing different cloud-based options for IT systems. And then the problems came. So the first problem suddenly was that after we launched the software, that our existing clients didn't want to work with it. And which was a surprise because the same clients would take a quick loan, but would not follow would not take our loan from our system. And so we discussed and we tried to understand what is the reason. And we would not really, it turns out that the clients wanted to talk with our loan officers. They didn't want to use the fast digital procedure, which is fine, which is great for us, but on the other hand, it's very bad for our business model because we cannot continue to work like this. So even if clients like us a lot, there has to be some change because otherwise we cannot sustain our cost. Another problem was that the software suppliers were very slow in doing the changes that we need to be done, and we were basically stuck with their technology. And also in the meantime, technology changed. For example, before the online application was based on emails, exchanging emails, confirmations, codes, and so on. Now it's everything is on mobiles, and there's no email so much. Also, we realized that if you want to do a full integration in full digitalization, the transition of our database was too expensive. Also, at that point, also we have the GDPR coming into effect in EU, and that additionally put a lot of problems, additional cost. So basically just to recap, what we learned from that is that we had to start all over and be open to the idea that technology changes so fast that we're not sure that even the current technology is real and it's working. So that's why we decided to work in such a way to be able to take control of our database, but use the applications in a very to use open and flexible applications, for which I'll talk later.
Okay, Artur, the floor is yours to tell us.
Thank you very much, ladies and gentlemen. Excuse me. And this equals 29.3 million flights between London and New York. My name is Artur Munteanu. I studied in the UK. Then I went back in Moldova, where I was born. I'm Romanian, but born in Moldova. And started up a microfinance company, Microinvest, which is one of the biggest microfinance companies in Moldova. It started very small, but is now a 100 million euro portfolio. But I've realized that microloans are good, but not enough to impact, to boost jobs, and to have a positive impact on society and environment. That is why we propose micro-equity, and today there were good cases of micro-equity and funds and private equity funds to boost jobs and have impact. But something is still missing. If I look at Eastern Europe, microloans, loans are available nowadays, but the equity is missing because SMEs are over-indebted. And in order for them to grow, to have a positive impact on education or health, they don't have enough collateral to borrow more. So that is why a missing middle exists, and instruments like equity, like quasi-equity, subordinated loans, revenue participation loans is needed. In microfinance, we know that microloans can create 1, 2, 4 jobs for family, but it cannot boost the number of jobs, cannot really innovate. But the equity and quasi-equity and revenue participation loans, we believe, can have a bigger impact. We don't know, additional research is needed. The latest research is on risk capital 2017, 2018, so new research is needed. But I looked at Eastern Europe and private equity and venture capital exist. In Romania, for example, there are 10 private equity funds and venture capital funds active, but they look at big transactions, 10 million and more, except venture funds focused on IT, which do invest €500,000 or €1 million, €2 million. But how about other businesses, not only IT? How about what I have seen on one private equity fund in USA? How about the boring businesses, the classical businesses? They also need equity and quasi-equity. So in our opinion, there is a big demand. But what is micro-equity? And I would like to compare with the micro-loan. I don't know why the micro-loan was defined 25,000. But for us, a group of people, we discussed that the micro-loans should serve a micro-enterprise. And if a micro-enterprise is defined by sales revenue of up to 2 million, then a loan of at least up to 2 million shall help a micro-enterprise to grow. So why defining microcredit at 25,000? It's a big question, and we probably need to debate and discuss. But for micro-equity, at least there are three segments: a low end, which will be below €100K, and a middle segment, which will be up to 1 million, and an upper segment in the micro-equity of up to €2 million. When it comes to small equity serving small enterprises, there are more funds. And in Western Europe, there are more funds than in Eastern Europe, but they exist. They're, again, more for bigger transactions, because apparently they say it's more easier to exit. But with crowdfunding, with collaborative mechanisms, I believe exit from small enterprises is possible too. So with equity, we can borrow more. If an enterprise will have a bigger equity, an SME will have a bigger equity base, so it can borrow more. It can have a bigger impact. It will be a longer term. It will be patent capital, because not all enterprises which borrowed money received restructuring from banks during COVID, for example. With equity, it's possible to restructure not only the financial instrument, but the company too. I mean, the banks will restructure and refinance the loans for the SME, but restructuring the loan without restructuring the SME itself, it's just delaying the problem in our opinion. And equity will have the possibility to participate via the board, via the advisors. We'll have equity funds, will have different possibilities to restructure the company and to build value. And value, not only economical value, but social value will be better controlled by equity or mezzanine instruments will be better implemented. Issuing a loan to a micro enterprise, yes, we say it's good, but if that is a small farmer and is using pesticides and we continue to pollute the land, is it good? Is it not good? Yes, we offer the chance for the small farmer to start a business or grow a business. But what if the small micro loans are used to buy new phones or laptops, which will be thrown away, and there is no recycling for them? So there are a lot of questions, but we believe that micro-equity can solve a part of them. Yes, with equity it's longer term, but the exit is an issue. But knowledge transfer via the board, via the top managers, via advisors, via consultants, it's much better compared to a debt instrument or to a micro loan. So today there were enough examples, but we've researched a few more examples and classified them by business models. For example, Biscaya Seed Capital in Spain, it is created by municipality. Anders Invest in the Netherlands, it is funded by farmers and individuals, more than 1,000, similar to the Belgian case which was presented today. Forest Effect Fund, also in the Netherlands, they support only work charts, bio-work charts on nuts or forests, so they want to have the effect of the forest on the planet, which is a great case. Revenue participation models, like We Are Uncapped, there are not so many revenue participation models in Europe, there are more in the United States. I have an example here of Lighty Capital from the United States. We see banks also getting very active. It was the same in microfinance. Microfinance started as non-bank, but then banks looked at the market as just Georgi mentioned in Bulgarian banks downscaled in the microloan sector, and we believe the banks will play an important role in quasi-equity or in equity. And we have the BCR Social Finance recently launched a fund specifically for subordinated product. We have Kayaxa Capital Risk. So we have more banks downscaling. But we also have crowdfunding platforms created by ex-top managers or serial entrepreneurs. And in Romania, there is one, Seed Blink. There are more crowdfunding. There will be a session on the crowdfunding. There is a mix between fund and crowdfunding. So there are a lot of possibilities to really work and achieve the social mission or the environmental mission or the climate mission that we have. Nonetheless, these new micro-equity initiatives or these mezzanine or subordinated loan initiatives, they also need capital to grow. They also need the seed investment. They also need to leverage the owner's money with bankers, with development financial institutions, or with municipalities. But I'm sure we can have a better impact on our planet. And as we talk about technology, technology is also creating waste. And we need to talk now about this, not in 10 years when we'll observe that technology created a lot more waste than agriculture or than chicken farms or cow farms that we need for bioagriculture. So converting from conventional agriculture to bio is an important step, but it needs a lot of investment. We've discussed in Romania and in Moldova with several specialists. It needs investment, but it will be good to leave the earth and the planet at least as clean as we have inherited when we were kids playing on the ground. Thank you very much.
Thank you, Artur. Thank you very much. Now, Evelyne, you have been many, many years in the sector. You have done many, many things. What's your opinion? It is better to improve more your IT system, your application, or try to engage with the fin company direct? What's the best case scenario now here? What do you think about it?
Yeah, first of all, I didn't explain well. We have a very strong IT structure, but we also have quite a few loan officers. So we always combine the personal effect and yeah, so, and we either do video screening or visit people at home. So it's not just online where personnel disappears, because we feel like that's high value for us to keep the personal aspect, and you gain a lot of information from that. So I feel you need to incorporate IT into your own organization. And nowadays there's more and more initiatives that are actually already that are building blocks or tailor-made almost for different alternative finance organizations or social investors. We're working, we're working with Signify, and there's different initiatives here as well, working on Salesforce applications. So I think you need to incorporate it, yeah. Because you know what you need in the system, they don't. Yeah.
And why should you engage with a Salesforce company? What's the added value that gives you at the end of the day?
First of all, we build our own system for 12 years, and it's everything is integrated except our coaching and training is already in Salesforce. But our system is so big and so focused on the Dutch market with Dutch databases that we can't export it to organizations outside of the Netherlands that we want to help. Salesforce is it's a proven application. It's modular. You can add things. You can program however to fit your needs, and it's safe. I trust that they keep up with the safety standards, because that's almost impossible to keep up with ourselves anymore. But it is an expense. Yeah.
Everything has its cost and its benefit. You must put them on a. So this process is finished or is under development?
It's under development. We've found. You also asked earlier, lessons learned. You have to be real consistent with your labeling. We've been doing this for 12 years and have added a lot of different products, a lot of different loan products. We are actually in the process of recreating our data warehouse, cleaning it up and being consistent with labeling, which is a huge project. So, and then we're, I think in 2023, we're planning to switch to Salesforce with our whole loan management system.
So for the next forum, we have to discuss again what went wrong, what went right, and what should we do again. Okay.
That sounds good. We'll talk about your blockchain and about our Salesforce implementation.
So, Georgi, as far as I understand, many things went wrong, right? And if you had to do it again, what you would do differently? Because in many MFIs around Europe, that's a discussion. We must go one way or another digital. It's not just a road with roses and in the clouds everything is fancy. Open the mic.
Okay. Well, first thing, I would diversify the different technologies that we use. Because, as I said, I would stay open-minded that technology changes so fast that you always be surprised by the future, and you have to be prepared and try to use different technologies and be prepared for the future. Because I think the good part, the good news is because it has developed so far, that so quickly in the last years, is that now you have a lot of, for new institutions that start now, you have a lot of options that you can use, which will not bind you to a specific software or specific technology. So now you have more freedom. Before, you very easily get locked with some IT company, with some of their database management software, their end-to-client software, and if you want to move and database grows, it's really difficult. Now you have so many more options. The bad news is that now, in the last year, you have decentralized finance growing up, which I think will be the next disruptive technology for the micro-lending part. Because if I'm a client, I would opt for the cheapest price. And decentralized finance will bring that. Whether we like it or not, it will happen.
On the other hand, this type of finance is mainly linked with cryptos. So your clients must pay salaries to the staff, to the suppliers. It's not so easy to lend them to Ether and then transform Ether to euros and then pay somebody and go back again. So
that's true, but it grows so fast that it will be out of crypto quickly. It will be part of the operations on different scale, not only with crypto.
Artur, since we have also a question from the audience.
Yes, please.
Does micro-equity matter, and is this a very nice tool for companies that are about to merge in order to support them with this instrument in order to be able this merger to be successful?
Today we had enough good cases, not probably not enough, but good cases, very good cases of private equity and venture capital supporting social and environmental mission, impact funds. We also know the microfinance, microcredit industry in different countries played a very important role. I think we can learn from microfinance, learn from private equity, venture capital, learn from crowdfunding, and mix all this experience, collaborate, and continue to create new companies and new instruments, financing instruments, like revenue participation, like subordinated loans, plus a equity kicker or a part of the profit in the future. And I'm sure that we can support more SMEs and have a better impact on SMEs and on the communities we live. There are different models. Several MFIs may create a fund or crowdfunding platform together with a microfinance institution. Microcredit institution may create a private equity or venture capital fund. Municipality plus private individuals, foundations, which we've observed today. In Romania, there is a serial entrepreneur. There are two serial entrepreneurs which started new financing instruments, but this is not enough. When we look at microfinance, there were 1-2 institutions like Mikrofond in Bulgaria, but then 10 more institutions were working, and then 10 banks were downscaling. In Romania, the same. So it's the same for equity. It's new, micro-equity, it's new, can play an important role, but it will, next years, we believe we'll have more new players.
And if we have discussed before, there is a really good case in Romania that they wanted to share with us that it works well in this field of...
There is Seed Blink in Romania. This is a crowdfunding equity.
Crowdfunding and equity.
Yeah. Okay. It's not a debt. It's not a debt or peer-to-peer lending platform. It's a equity platform. So investors, retail investors, and funds are investing in equity of the SMEs. Seed Blink. There is Equiland, is fully owned by an entrepreneur which is owning do-yourself stores. So they set it up a private equity fund for Romanian entrepreneurs. And they invest from 1 to 5 million euro. It's not online, it's classical, it's face-to-face, it's screening before. It's not like microfinance opening a branch and waiting for the clients. It's researching a lot, as it was mentioned today, researching a lot potential deals with impact and with possibility to export and create jobs. So these are the two that I recommend to look at. But the market is big, and we believe there is market, and we want to create another option there. So.
And it's clearly considered an impact investment, such type of instrument, right? It can focus mainly on impact rather than profitability.
Depending on the investment strategy of the fund, or of the initiators of the fund, Seed Blink is more into innovation, tech, IT. Equiland is more into classical businesses, not IT for sure, because they are in a different sector. So depending on the investment strategy, you can start a universal micro-equity fund, or you can focus on impact only, or on export, or on job creation, or I'm sure on health and education. So depending on the initiators, management team, and asset managers, new asset management teams that wants to develop something. And microfinance started and paid attention to banks when non-bankers initiated microfinance, because bankers were saying, you know, small clients will not repay, you'll lose the money, it's very costly, and so on and so forth. And private equity, classical private equity, are saying the same, that transactions below 10 million euro, it's not possible to exit, you lose money, and so on and so forth. So I think there are a lesson learned from microfinance, and micro-equity has a chance to grow maybe quicker with technology than microfinance.
Okay, since we are coming to the end of this session, there's one last question for the audience. Anyone of you can reply. That's really interesting. Credits granted via digital process or non-digital are riskier or not than the traditional way that you did so far? What's your experiences about it?
Sorry, repeat one more time.
The risk that the MFI has if it goes digital or keeping traditional are the same or different? What's your, maybe, Georgi, your experience is more that if the risk has changed since you become more digital than traditional you are. I don't know, all of you may reply if you want.
Well, the risk is not directly connected to the way you provide the loan. It's the methodology. So the risk just make it, the technology, the digital technology just makes it cheaper and faster if you structure it well. So it's not really, we don't see that there's a big change in the risk, there's a change in the cost.
Yeah, I believe you spread the risk more too. You can do much higher volumes. And depending on how you arrange your, how you build your system, you can keep a really good score, a risk score module as well. Yeah.
Okay. This is it for us. Thank you for attending. Thank you for being here. Thank you for the questions. It's clear we gave an appointment with all of you for the next couple of years because we must repeat and tell you what we have done. And I hope we're going to have more successful cases or even bad cases that must prevent and not do the same. Thank you.
Thank you.